All right, let's get started. So, the theme of today is we're going to look for some, we've been doing a lot of short-term trading techniques and doing some short-term trading in here, setting up some levels the past couple weeks. And let's switch gears here and apply the core strategy that we've been working on to the larger time frames. Okay? And we'll try to find the next some big moves in the near future. We've caught some pretty huge moves here at FX Street over the past couple years, and let's do that again, and let's apply our core strategy when doing that. Okay? And the market, market volatility obviously has been pretty extreme lately, and that just means that the distance between our larger time frame supply and demand levels is really big. So again, if you're brand new to the whole supply and demand concept that we talk about here, you probably want to go back and review some recordings, and we'll have other lesson days on it. But today as an application session, we're going to apply our core strategy, right? Pure market timing based on price action and price action alone. No indicators, no oscillators, no news, just price and market timing, which means the ability to time the market's turning points in advance with a very high degree of accuracy. So we're going to do that here today. Okay, and again, let's jump in and get started. So let's start with the euro, right? Quick look here at the euro. And remember, today we've been doing a lot of short-term trading with the whole supply-demand concept. Today we're going to focus on the larger time frames. So everybody should be able to see the screen, and we see these are our bigger picture levels we've been dealing with. These are some FX Street levels, supply and demand. But I think we can add one level here. Okay. And I'm going to draw that in for you, and then I'll grab the chart again, and we'll talk about it. There's that one. So on the weekly chart, these are the three turning points, three areas where we would expect prices to turn. Now, let's talk about this upper supply level, if we should happen to get a rally in the euro. Okay? If we should happen to get a rally in the euro. Take a look at this supply level here. Rally-based drop. We've already had one pullback here. This is a nice short for us. But take a look at the price action here. Price barely trades into the level and collapses from that area. So what does that tell us about the supply and demand equation here? Lots of supply or not too much supply? In other words, small imbalance or big imbalance? What does that tell us? Yeah, pretty big imbalance, right? Exactly. So normally we only want to take, remember one of the odds enhancers we talk about, we only want to take the first pullback in price to a level. Okay? But, the times when we can, the times when we can take the second or third pullback is when that first pullback into an area is very shallow. Make sense? Now remember, for those that are new, what we're talking about, this point here is very different from what the trading books say. All the trading books say, when you don't take the first retest of a level, let the level be tested a few times and then take the pullback, right? Well, if you really think the logic through, that's the wrong thing to do. Think about it. Remember, I started my career on the floor of the Chicago Mercantile Exchange, now the biggest exchange in the world. And I was dealing with institutional order flow and bank order flow in the currencies for years. And what I had in front of me all the time were stacks of orders, buy and sell orders, right? But think about it. Every time price would come down to a stack of buy orders, which was demand, right? What would happen to that pile of orders? Is it increasing or decreasing? Right? What's happening to that pile of orders? It's decreasing, right? So think about it. You don't want to take so in other words, every time price comes back with each successive pullback to a level, that level is getting weaker, not stronger. Okay? All right. So let's watch for that. Yeah, we're going to look at the dollar, a chart of the dollar next. Okay? Yeah, both of these we would consider Nico demand levels. Okay? Both of them look okay. Now this one, this 135, I would use this more as a target. If prices come up into here in the euro and we get another short position off, I would look for this as a target, and I would only buy against this middle demand level for a short-term trade, not a big swing trade. and then I'd be more excited, buying down here at the lower demand level for a bigger picture trade. Does that make sense? Okay. But at the very least, we see the distance between our bigger picture levels is pretty wide. That means volatility is likely to be very big and strong, which is great. We like that, right? Remember, if you can time the market's turning points like we do here, you love volatility. If you can't, you don't like volatility. So that's a weekly chart. Let's get off this chart now and move down to smaller time frames. Okay. But before we do that, I want to take a look at the dollar. Yeah, the dollar's not moving too much. A lot of people are focusing on. So again, these are the levels we've had in FX Street for a while, but we're going to add something to this now. There's the dollar chart. Okay. Sorry about that. There we go. Yeah, so take a look at the dollar. Yeah, the dollar index is definitely made, it's a weighted index, dominated by the euro, of course. Okay. Yeah, but you want to use the dollar index to time your trades. Okay. And let's take a look. So if I blow this up, so we had a nice move off that demand level. Now we've just been kind of chopping around sideways, but let's blow this chart up. Okay, and let's see what we have above and below. Now the thing is, what's interesting is, I keep thinking the dollar has got to get weak. I keep thinking the dollar weakness, but the chart is, I'm looking for a fresh supply level above, and it's not just today. I've been looking for that for a while, and I can't really find a fresh supply level above that's close. Okay, a level that looks really good to me, and you've seen a number of these work here at FX Street. I'll just draw it in for you. Okay, and I'm not saying the dollar's just going to shoot right up to this level, but the fresh supply level above current price is, let me grab the chart again. It's really not till up there. Okay, now I know we have a bunch of pivot highs and stuff like that, but again, that's textbook version stuff. We want, if we're looking for really high quality, high probability levels, that's where I'd expect the next turning point to come from. All right, makes sense? Okay. Any questions on that? Oh, you can't see it on the chart? Let me grab it again. Yeah, that would be, let's see, 79 for the dollar. Yeah, there's a pivot high right here, but again, be careful buying pullbacks taking pullbacks to the pivots, especially this one. All right, excellent. All right, let's move on. Yeah, so odds enhancer number one is how did prices leave the level? And I think that's the question you're asking there. So the stronger the moving price away from an area, the more out of balance supply and demand is at the area. So watch for that. Okay. All right, let's come down to a smaller time frame here. Yeah, so that pivot is already a pullback. You know what I mean? Let's take a look at a larger intraday time frame of the euro. And again, I'm not going to spend too much time here just because there's not in my mind, there's just not a whole lot to do here. Okay? If we start at current price and we look down, all these pivots are just pullbacks into other areas. Now, what that tells me is that the euro can really move away from this area. I mean, you can get some pretty big swings. Okay? The level of interest on the downside is right here. Okay? So we've got a little demand level below. Okay, so let me write that in for you just so we know what to do there. Okay. And remember, make no mistake about it, at these levels we are expecting prices to stop falling and turn higher. And I'll take this in for newer people. There we go. And let me grab the chart again. Make sense? Why are the wicks not included? Kellen, so I'll go over that here, but again, I strongly urge you to review the recordings. I think that'll help you. Yeah, we draw our lines. Remember, at Online Trading Academy, in the XLT, that's the trading room we have a very rule-based way of doing this. There's a reason why we do everything we do. Okay. This might be seen on the hourly, Nico. You could take a look. Okay. Yeah, so let's go over quickly how we draw those lines. Okay. Let's see. Just want to make sure I don't miss anything. Yeah, so Haley or I'm trying to get to all the questions. Sorry about that. Yeah, Haley or Simon, just if you could repeat that question, I'll take a look. Yeah, Eric, but that's the entry, right? So the reason why we draw the lines we do here, take a look at this top line of demand. So yeah, I'm cutting off the wicks on the top line of demand just like we cut off the wicks on the bottom line of supply. Okay? I want to make sure that I think we'll have plenty of time to set up some trades like from start to finish like we usually do. So the reason why we put our top line here and not like all the way up here, right? I want to put my top line right here, okay? And because when we buy at demand, who are we buying from, right? Who do you want to buy from at demand, right? You want to buy from someone who has no idea what they're doing. You want to, who is the seller? So let me ask you, would you rather, when prices come back here, would you rather buy from a seller who's selling here, or would you rather buy from a seller who's selling down into the meat of the demand? Make sense? So for the top line of demand, just like the bottom line of supply, we want to put that line snug up against the candle bodies. Does that make sense? Okay. Any questions on that? Okay. All right. Yeah, so the way prices shot out of here, Nico, we would consider that pretty strong. And then look at prices almost come back to this level, but they don't. Right? They barely make it back to this level. Again, that tells you there's probably quite a bit of demand there. And the lower line, Alex, we put at the lowest price in the base or the bottom of the wick, and then we put our stop just below that. So the top line helps us buy from a seller who's making a very big mistake, selling right into the meat of that demand. And then that's the top line. And the bottom line we put here with our stop just below it gives us the best chance in the trade. Make sense? Okay. Yeah, Trade Maven, you could certainly short on a smaller time frame down to that level, but don't forget about the big weekly level above. Okay, either. All right. So let's see I don't know if there is any supply on a smaller time frame. Let's take a look. Something a little bit smaller. Go down to a 5-minute chart. Again, I wanted to make this a longer-term session today, but we can take a quick peek at a smaller time frame. Yeah, by the way, there's a nice 5-minute level up here at, let's see, 143.35. Okay, let me just draw this all in for you. Let me set this trade up, and then I'll grab the picture again. And okay, so 143.35. Stop at 143.61, and let's draw that in. So there's that. Just a little small time frame supply level up here. Just something to keep on your radar. Not a big deal. Yeah, I do. There's actually 3 levels on top of each other here, Ali. So. We like that. Right above this whole area up here looks pretty good. 143.35 to 143.80. You could probably short, once or twice off that. I would imagine. Okay. Trade Maven, you had that one planned out. Excellent. Good. And this has all the odds and answers too. I mean, look at how prices drop from this level. It's well positioned on the larger time frame curve, meaning it's closer to larger time frame supply than larger time frame demand. Right? All that good stuff. Yeah, so let's do this now. Watch. So this is 143.35. So let me go back to the this weekly chart here, and I'm going to put a line at 143.35, and I'll make a line blue. Let me grab the picture. Whoops. So the question was, how do you define the larger time frame supply demand curve? Well, here's how we do it. So this blue line, this is right here where I'm pointing, is where we have that smaller time frame sell setup. So what we want to do is make sure that we're looking to sell short here, far from this demand, and ideally kind of close to the supply. Make sense? So in other words, if this blue line, because this blue line represents where we're going to get short. So if that was like down here, not a good idea. You know what I mean? But anything, midway or higher, I'm very comfortable with. Remember, the supply curve is great, but it only means something if you know how to, where the top and bottom is, right? So yeah, Rafaelito, if you, let's see. Yeah, when it's high on the curve, remember, high in the monthly or weekly chart, be careful, because what does that really mean? That doesn't really mean anything. Like, just because it looks high doesn't mean it's high. High in relation, you need to add where the turning points are, where the big picture supply-demand levels are. So high up on the curve, close to supply, that's a big deal. Okay. Momentum, you're not going to find too many people that make money trading a conventional momentum style, meaning wait for price to start rallying strong and then buy. And you're not going to find many people doing well with that. So instead, Rafa, off of these levels, once prices come back to these levels, like take a look at this weekly supply level. As soon as prices hit, we were short sellers at the top, at the line, right? Then when price moved away, that's when the momentum comes in. So by trading like this, you're going to get paid from the momentum traders. Does that make sense? So let's take a look at, take a look at a daily chart of the pound. Or actually, I could go with any market. All right, Maurice, you want to see the pound? Yeah, let's see. So if we start here, I'll make the chart a little bit smaller. And let me grab the chart picture for you again, and then let's do the first thing to find the next big move in any market, you need to first quantify the larger time frame supply and demand curve. So looking at this chart, are you closer to larger time frame supply or larger time frame demand? Larger time frame supply or larger time frame demand in this one? Probably larger time frame supply. Yeah, I would agree, right? So we've just hit this area, and now we're kind of falling from it. Let me just draw that in. Okay, so we've hit this, drop base, drop supply, and now we're falling. I wouldn't worry about prices getting hung up in this area too much. Let's take a look. This area, I wouldn't expect too much to go on there. This is just a pivot, which is a pullback into this. So, the pound, it looks like there's a decent amount of room for prices to drop in the pound. So let's go down a time frame and see if we can, find an entry based off that. So let me go down a time frame. The tricky part isn't figuring out where prices are going to turn or where they're going. The tricky part is how to find a way to get in on that move that's low risk. Like here, once when we look at even coming down to that time frame, let me go down to a 60-minute. There's really nothing of quality just above. Again, so I'm already down to a 60-minute chart, and I'm having trouble finding a supply level above to short against. Okay, let me go down one more time frame. Yeah, this has just been a big free fall. 154, 156. Correct. Maurice, yeah, that's a huge, huge point there. See this pivot low here, Maurice, that I'm pointing to? See this? See how prices just blew right through it? Makes sense? See, that's why we and keep saying, don't just buy a pullback to this. This is already you've been here so many times already. I wouldn't worry about prices stopping here at all. They just kind of blow right through it. All right? Okay. So not a whole lot else going on in the pound. I mean, if a new supply level was created, we'll like that, but we just need something else to develop here. Does anybody want to look at another market, different market? The Aussie? Okay, let's take a look at the Aussie. Give me a second here. We'll get the chart up. All right, here we go. And let's start with the bigger time frame. Just a second. So here's a quick look at the weekly chart. Again, down into this level, but this level has a big wick to the downside. For those that have been with us for a while, that suggests that lower prices can, you can see lower prices from here. So let's go down to the smaller time frame now and see if we can set something up. All right, finally, we've got something here. So obviously this market has really, really rallied in incredible rally. But recently, we've had a big turn to the downside. Now, why did that turn to the downside happen, on really any time frame? But why, on the weekly chart, daily, whatever, how come we just had a big, move to the downside? What's the reason? Right? It's because this market finally reached a level where willing supply exceeded willing demand, right? Make sense? Therefore, if in the big picture, this market has reached a price level where supply exceeds demand, what should we be looking for? Should we be looking for longs or shorts? Right, shorts. Okay? So when we come down to I've come down to a pretty big intraday time frame here. Okay, and I'm going to draw on 3 levels, and then we'll talk about them for the Aussie to short against. Okay, so here's the 3 levels. Let's put our lines in. Remember, everything is according to rules. So for supply, the bottom supply line goes snug up against the candle bodies, and the top line goes at the high price in the base. And let me just draw these lines in. Here we go. So yeah, Joe Glue, yeah, we want to be short sellers at the bottom black line. Okay? Limit order, no, I'm just telling you the way I do it. I mean, I use limit orders at the bottom black line and a protective buy stop just above the top black line. Okay? So we have 3 choices here. I could tell you, think of economics 101. Your strongest level with the biggest profit margin is going to be the upper one. But, I don't know the price is going to get there or get there anytime soon. If it does, great. But, okay. But, with either of these, your first profit target, there's nothing wrong with going 2 or 3 to 1 to the first profit target, moving your stop break even, and then going for a bigger move based on the chart. Okay? If you, because these bottom 2 levels are so close to each other, and they offer us that levels on top of levels odds enhancer concept, I would probably go with the upper level. Okay, so we'd be selling short, okay, right here, with a buy stop. I'll just make the buy stop the red line. Okay, so if we were going to take this middle supply level, you'd be selling short right in the circled area there, with a red line being the buy stop. And yeah, so now the fact that you have this levels on top of levels concept, okay, it's important that you understand that. What does that really mean? So the fact that you have this lower supply level, right, sitting just below this middle supply level at 105, makes the 105 supply level a better level, because the fact that you have a supply level sitting just below means if and by the time you get to this middle supply level, right, you will have traded through this bottom one. And what is it going to take to trade through the bottom one? It's going to take quite a bit of buying, right? You're going to have to absorb all the supply, all the sellers that are in this lower level, which means that by the time you reach this upper level, the middle one, you're going to reach it with the fewest buyers on board. Does that make sense? Yeah, but remember, Will, that bigger picture demand isn't as fresh and nice as we like. Okay, it really doesn't. It's not a quality level. Okay. Yeah. No. Well, that's the other thing. Yeah, Jason, price can certainly turn at this lower one. Okay. If you're okay with the risk reward on this lower one, it looks like a decent trade. I don't see too much wrong with it. Okay, it looks okay. All right, with either of these, and I'll draw that in too. And again, the Aussie just has a lot of room to fall, and we now have evidence that it has reached a price level where supply exceeds demand. Yeah, so Andre, remember, one of the big rules that we have that's very different from the book version of support resistance is we do not cut through candles, meaning we don't cut through candles over to the left. Like, we don't look for a bunch of places over to the left where you touch price a lot of times. You know what I mean? We don't look to connect a lot of highs and lows like the books do. That's a very, very flawed school of thought. And if you think the simple logic through, I think you'll understand it. Okay. All right. Oh, the reason up here, Andrea, why we cut through, you're talking about cutting through these two? Because I want to focus on the origin of the drop in price. Where did prices really start collapsing from? Make sense? It's right here. I could put my lines right there, but did prices really start falling here? Or can you see how the supply-demand imbalance is really more up here? Does that make sense? It's a subtle point, but it's very important. Okay. So how many of you have been doing this for, I know Boyke and that whole group, how many people have been listening to some of these supply-demand talks for at least a year? All right, so a few people here. Now here's my next question. How many people are finding that their biggest problem is that price gets like really close to their level and then turns and you don't get filled? How many people find that's like your biggest problem now, that price, you barely get there and then you just don't get filled? Yeah, so look at how many people are saying yes to this, right? Right, so what's happened is you've become too good at this, right? In other words, you're finding the best level, so who are you competing with for entries at the levels you're finding? You're competing with the banks now, right? In other words, you've moved away from the trading book version of support and resistance. Now you're onto real supply and demand, but the problem is now you're competing with the banks for buys and sells. Now you're buying where they're buying and selling where they're selling, so it's going to be tough to get filled, right? There's a big queue, and they've got millions and millions and sometimes billions of dollars of money to put at this, right? So one of the things you can do there is create a little buffer. In other words, once you have solid evidence that you are picking quality levels, meaning, you have a nice long history of kind of not getting filled, but price doing what you thought it was going to do, now you can start to add a buffer. Now you can, now you can scale into positions, things like that. Okay? Meaning get in just a little bit before the level. Just a little bit. Okay? Because the thing is, where I'm teaching you to draw your lines, I'm doing this because I want you to be safe, and I want you to, when it does hit, I want you to have a nice big winner. But the reality is, I'm also doing you a little bit of a disservice. In trying to protect you and help keep things safe, I'm also, showing you how to draw these lines, is going to lead you to compete with the big banks and the big institutions. Does that make sense? Okay. Yeah, so I guess you can call it legal front running, right? Just get in a little bit before they do. That's the legal way to front run. Okay? All right. Meaning that, look, if like this level right here, if this price is at 104.55, get in 2 pips below that, right? Think about, now, again, you don't have to answer, but think about your own trading, and think about if you just would have had your entry 2 pips closer or 3 pips closer to price. And you know who you are, and you know what your history's been like. How many more trades have you would have gotten filled on and done well? You see what I'm saying? Okay. You don't want to start getting in when prices are already moving in your direction. That's not the way to do it. All right? Okay. All right, so given that in the larger time frame, get back to the Aussie for a moment. This thing has been on a ferocious rally. Get you the bigger time frame chart. So you can see in a monthly chart, right, obviously this market's been on a tear for years. And now when we come down to the smaller time frames, again, we see we just had a very big crack in price, which tells us that just above, let's see, we're just above 110 there, right? That, supply, so we finally hit a price level in this market where supply exceeds demand. So once we identify that, then we want to look for smaller time frame supply levels to short again. So we just identified 3 there. And the time frame I did that on, if you want to do it on yours, is the 240-minute chart. That's a really nice, bigger intraday time frame. All right, makes sense? Anybody want to look at another market? Sure, you can find these levels on weeklies, absolutely. If you want to see one of the best ones you'll ever find on a weekly, I'll show it to you here. This has got to be like the trade of the year. Well, I don't know. We hit that S&P. We hit the S&P drop from 1340. That was pretty good, but I'll show you another market. Well, let me show you this one. How many people are in the XLT at Online Trading Academy with us here today? Anybody in the XLT? Here's a couple levels we've been shorting, level we've been shorting against. So there's a few people with us here today. Here's the S&P. So just so you see how this stuff works in a bigger time frame. I mean, this is the S&P here. We caught this big drop from this supply level up here. Okay? There's one. Let me show you this is another supply level that was just golden. And it's in crude oil. So here's the chart of crude oil. Again, it doesn't matter what market we're talking about. And a lot of these markets I'm showing you now relate to the currency markets. So there's a nice level on a weekly chart. We had this one in XLT real nice. Okay. All right. So just wanted to show you, we'll get back to the currencies now. Just wanted to show you that, there are other markets too that are just phenomenal for levels. Yeah, so gold is a market that, let me pull up gold here. Let's take a look at gold. Yeah, I had an order in this morning in gold. Yeah, the XLT is the live trading rooms where we trade with you and set up these trades at Online Trading Academy. You can always send me an email if you have any questions about it. Let me draw on this level for you. Now, gold as well on some of the larger time frames has recently, today had a strong rally and then finally a strong drop. So the level I'm looking to short against is right up here. That's right about 1764. Does everybody see that? Does everybody see the chart I'm pointing to here in gold? And the reason why I came down to a 5-minute chart is because you really have to come down to a small time frame to find a level to short against. Okay? The reasons for even thinking about shorting gold, I'll tell you the reasons. Number one, on the weekly chart this week, you had this huge long rally and then we had a gap up. That tells me that you're probably getting ready for a pretty decent sized turn. Okay? Yeah, Joe Glue, I'll type that in a few minutes. So this gap up in price after a rallying price, if you're in the XLT, you know what that's called. It's called a novice gap. Okay? So, and also too, we just hit 1780 and fell pretty hard to 1720, 25. So those two things are telling me that, you know what, not a bad idea to take a little nibble on the short side. Okay. So I found this little 5-minute level here. I would look to short against that, and if you want, you can also take this upper one. But I would personally, I would look to hold it for a little bit bigger move than just a little day trade. This is a fresh level, Scott, because once prices left the area, you have not had any pullbacks. Does that make sense? No pullbacks since this became a level, since it moved far enough away to even be called a level, prices not come back to the level. Okay. So you've got a nice low risk, 64 to say 68, for potentially a much bigger move to the downside. So we'll see. But certainly this area, this 765 to 75 area, is something to watch for. Okay. And gold as well. Not that I ever really get into the fundamentals, but I just I don't really understand why gold is like the, I don't understand the value in gold. I mean, if the world was really in so much trouble and economic trouble and all this stuff and everybody ran out of money, and and someone handed me a peanut butter and jelly sandwich in one hand and a bar of gold in the other and said, pick one, I'd take the peanut butter and jelly. You know what I mean? Anyway, I'm not going to spend too much time thinking about gold. So, but I would look to short it up at that level. Demand levels for gold are quite a bit lower. Quality demand levels, that is. Fresh levels, you're probably not looking till the origin of the gap, right around 1665. That's about 100 points lower. About 80 points lower from here. Okay. Drop-based drop is okay, Brad, as long as, those other odds enhancers are in play. Okay. 1755 would not be a supply level for us because that's not a fresh level. That's the big key. The big key is fresh versus not fresh. How do you know that there's a lot of orders there or no orders left? And that's why we focus on that whole fresh versus not fresh concept. Make sense? All right. Someone asked me to type my email address in. I am pretty caught up on email, so if you happen to not get a response or something, here's my email address, seiden@tradingacademy.com. Let me pull up another chart. I was looking at the euro-yen, but I just didn't see a lot. I mean, there's plenty of shorter time frame opportunities, but I didn't see a lot of larger time frame opportunities that close to current price. Let me check one more. Most of these markets are kind of in the middle of moves, so the only one that, give me just one more second here. I know we're kind of running out of time, but. And also, too, again, if you're new to this, there's plenty of recordings with very detailed lessons on the whole supply-demand concept, both on the FX Street website and on the Online Trading Academy website. Okay? The only thing that I found in this, there's one more market here that you may want to look at. I'm not really, let's see here. Actually, I was looking at the Aussie yen, but I'm not even going to put that level in because it's not a quality level. Okay. It's not because it was previous support or resistance. Again, once you know the odds enhancers, that's the key to knowing if a level is fresh or not. Does that make sense? In other words, strong move away, but when does a level even become a level? Well, you need to make sure that price has moved at least 2 or 3 times, 2 or 3 to 1 away from the level. Meaning, if the stop is 10 pips, if the top to bottom of the base is 10 pips, price needs to move away at least 20 or 30 pips for it to even be called a level. Does that make sense? Okay, otherwise it's not even a level. And then the level's got to be fresh, meaning prices, can't have pulled back to the level even once. Give me just a second here. How much time at the level, all those things. Yeah, someone's pointing out the yen futures. Okay. No, I don't think this is recorded, but there's plenty. No, I was just saying there. Sorry about that. I thought I didn't realize the mic was off. No, there are tons and tons of recordings. Okay. So, yeah, those odds enhancers are the key to knowing when a level's fresh. And remember, a level doesn't even become a level until it moves away from an area, at least 2 or 3 to 1, meaning if the distance from entry to stop is, say, 10 pips, price needs to move away at least, 20 or 30 pips for it to even be called a level. Does that make sense? Okay. And again, all that information is in a lot of those recordings, which can be found both on the FX Street website and the OTA website, Online Trading Academy. And, someone pointed out the Japanese yen futures being near a supply level. Oh yeah, those articles too. Thanks for reminding me, Ali. All the articles on Online Trading Academy's website, especially the last few, really deal in depth with the whole supply-demand concept, with rules and all that. And they're all free. They're all free. Okay. Oh, bam. Yeah, big difference between levels and pivots. Okay. Big difference. Joglu, I'd probably say an hourly chart. Okay, probably about an hourly chart, hourly or daily. All right. I know we're pretty much out of time here, so let me type my email address in here again. we only got a chance to set up 2 or 3 trades, so hopefully you're able to jot those down. And, okay, we've got another session out. Elliot, it's okay. The only thing you gotta be careful of, there's demand a little bit below, so just be careful with that. In other words, yeah, you're into some supply, but remember, you have to have a profit margin. That's another key odds enhancer. Check out the recordings, and we'll be back in a week or so. We'll have a much more structured lesson, okay? I guess maybe this was recorded. All right, have a great day, everybody. Thanks for your time.